Good afternoon and welcome to Midcap Radar. I'm Reema Tendulkar. With me is Pavitra Parekh, and these are the top stories that we're tracking at 1:30 p.m. The Nifty slips below 17,800 as stocks see nervous trading ahead of the much-awaited U.S. Federal Reserve policy decision and amid continuing geopolitical tension in Europe. Mid-caps fall less than large caps. Pharma metals lead the decline while FMCG stocks show resilience.
Central bank jumps after it exits RBI's prompt corrective action framework, while a now stronger Yes Bank perks up after its board clears the sale of 48,000 crore rupees of weak assets to JC Flowers ARC.
KPIT Tech gains as ARM acquires 4 Technica Group companies for nearly 650 crore rupees.
And KNR Construction gets a fillip as its arm gets a bonus for early completion of a highway project.
Axon Noble gains an optimistic management commentary looking at strong double-digit volume growth. The management tells CNBC-TV18 the company expects to return to margins of 15 to 17% by Q4. Just a quick check on the markets. We had that afternoon slide around noon, but since then things have stabilized. So right now as we speak, we're down about 0.5%, but you could see that slide take place between 11:30 and 12:30. After that, there was a bit of a rebound. And since then, in the last 15 minutes, things have been on the flatter side. The key indices are down close to about 0.5%. The Nifty Bank underperforms, and the advanced decline ratio is well in favor of the losing side, 1 in the green for nearly 2 in the red. Rahul Sharma of Equity 99 Advisors joins in for a technical check on the markets. Rahul, 2 days of good gains for our markets. Today, we've seen a bit of a sell-off. Again, not too much. The dip has been bought into. Your thoughts?
Yes, definitely. See, good afternoon, Reema and Pavitra, both of you. I think the market has been in a range today, but as all we know that we are waiting for the Fed announcements and the upcomings of that meeting. So I think on the retail side, everybody is cautious and not taking too much of the trades before entering into any zone which can come up tomorrow. So I think going index specific will not be a good decision right now. So my idea is to go stock specific at this point of time.
All right. And what would be those individual stock recommendations that you would have right now?
See, I have listed 2 stocks. First is SW Solar, Sterling and Wilson Solar. So this stock is trading around 322 levels. It's around 6.5% up right now. I think the way it has given the breakout on the daily charts, I think this stock is ready to go up to the levels of around 340 to 350. So one can take the trade at any declines or at the current levels as well. Stop loss should be placed around 310, and the target price for SW Solar will be 340 to 350. Second selection is IIFL Finance. The stock is trading around 368, 369 levels right now, around 2.5% up. This stock, if you see on the charts, it's giving a brilliant breakout, although it was a consolidating from past quite time. But from last 5 to 6 sessions, we have seen that there is some kind of evident uptrend coming. So I think IIFL Finance has a potential to reach around 390 levels. So at present value, one can take trade with a stop loss of rupees 358 in IIFL Finance.
Rahul, thank you very much for joining in. Let's get to our mid-cap movers segment. Vivek is joining us. He's at the big wall and he's going to tell us all about the mid-caps that are moving around in trade. Vivek?
Well, that's right. Quite a few stocks. Some of the stocks, in fact, today that were buzzing all throughout the week, last week, today seeing a bit of a cool-off. But some fresh names making the list today. First on the list is Arvind Fashions today on very strong volumes. The stock is up over 9%. The other one, of course, is Dish TV. The resignation of the promoter has ensured that this particular stock continues running for 3 to 4 straight sessions. Also, another name that we don't talk about much, there's been a name change as far as RHI Magnesita is concerned. But after that, the entire mining sector is something that is in focus, and this particular stock continues to gain. We did see some news flow coming in as far as solar modules and the entire solar manufacturing ecosystem is concerned. Sterling and Wilson sees an up move based on that particular development. So seeing Butterfly Gandhimathi after the development of the OFS by CG Power, today the stock has rebounded very sharply. And Krishna Medical, after the continuous stake sale that we saw as far as General Atlantic is concerned, continue to see an up move for the second straight session. As far as the entire cement pack is concerned, the news flow coming in as far as pledging of shares as far as Ambuja as well as ACC, this particular sector has taken quite a bit of a beating today. Ambuja, ACC, Nuvoco, even names like India Cement, etc. have seen quite a bit of a downtick. Lastly, when you're coming across to two particular names, you're seeing Jacob, the resignation of the CFO has led to quite a sharp downtick, almost 6% downtick, and Brigade Enterprises too, seeing quite a bit of volatility in the last couple of trading sessions, today down almost 5%.
All right, Vivek, thanks a lot for getting us that entire list of mid-cap stocks which are moving around. By the way, the news flow that Vivek was referring to, the government has approved the PLI scheme for solar modules. It was just on your screen. It's for 19,500 crores. So the likes of Sterling and Wilson Solar, also Borosil Renewables moving up in trade. But with that, we're going to get into a short break now. When we come back, we have our special segment, Midcap Spotlight. And today we're looking at KPIT Tech. Rima is going to tell us what's driving the stock.
Which is driving KPIT technology, but more of that after a short break.
Welcome back. You're still tuned into Midcap Radar, and it is time for our special segment, Midcap Spotlight. Today we're looking at KPIT Tech. Rima, what has the stock so excited?
Well, just on cue, as we were talking about KPIT Tech, going into the break, the stock has spiked up close to about 3% now. Before that, the gains were fairly sedate at about 1%. Okay, so the news for KPIT Tech. They've acquired an automotive prototyping and products company called Technica Engineering. This is an EU-based company for 80 million euros. At the current conversion rate of euro-dollar parity, it turns out to be about $80 million. The consideration will be paid over 6 months, and over and above this $80 million, the company has said that they will be paying a maximum of 30 million euros as earnouts over the next 2.5 years. Now about the acquired company. Now it had revenues of 43 million euros and 20% EBITDA margins. So margins are largely similar to where KPIT Tech is currently operating at, slightly higher. Analysts estimate that once fully consolidated, this acquisition can add about 10 to 11% to KPIT Tech's top line, and the company has said this acquisition will be EPS accretive. The acquisition will be closed in October. So in the current year, in FY23, KPIT Technology will get 5 months benefits of a consolidation, November, December, January, February, as well as March. So the question is, what will it do to FY23 guidance? So for that, we await more clarity from the management. The current guidance is the revenue growth will be 18 to 21%, volume growth will be 25%, and EBITDA margins will be in the range of 18 to 19%. Now, but since this acquisition has come on board and it will contribute for 5 months in FY23, this guidance is likely to get boosted, but we'll need more clarity from the management on the quantum of the guidance upgrade that we could see. So that's about KPIT Tech, the acquisition giving the stock some legs. But let's move on and talk about Triveni Turbine. 21.8% equity has changed hands in a block deal today. Promoters have bought 10% stake. What about the others? Vivek is here with the details.
Well, yesterday in our show, we had mentioned and we had highlighted both of the stocks, both Triveni Engineering as well as Triveni Turbine. And we had told you about how, there was renewed buying interest and there was quite a bit of chatter as far as the stake of Triveni Engineering in Triveni Turbine was concerned. So at the end of the June quarter, Triveni Engineering held almost 21.85% stake. And the company had said that they had decided to divest the entire stake. So today, along expected lines, the entire 21.85% stake held by Triveni Engineering and Triveni Turbines has been divested. Now, out of that, 10% stake was bought by the promoters of Triveni Turbines. And very interestingly, the remainder of the stake, we had the management of Triveni Turbines tell us that very strong interest was seen. And in fact, sovereign wealth funds, both from Singapore and Abu Dhabi, as well as very large Indian mutual funds had participated. Going forward, they did mention that there could be more inter-se promoters transfers happening so that the entire alignment of the management of Triveni Engineering and Triveni Turbines would be along the lines that the management has alluded to.
All right, Vivek, thanks a lot for that. So Vivek was just talking about what the management had to say. We spoke with Nikhil Sawhney, who's VC and MD of Triveni Turbines. So let's listen into that.
We're very proud that we have, and I believe very marquee investors, many sovereign wealth funds and large international institutional investors, as well as very large mutual funds. And I think that we have, I believe, extremely quality investors. This was, of course, as you alluded to, a divestiture from the engineering side, where they've sold 21.8%, I think, for approximately 1,600 crores. And we at Triveni Turbine are extremely proud of the fact that we've been able to actually expand the float of the stock, as well as the promoters itself have also bought 10% of that block. The ultimate plan, as I am the Vice Chairman and Managing Director of Triveni Turbine, and my brother is the Vice Chairman and Managing Director of Triveni Engineering, it would be for majority shareholding to reside with the operational executives of that business from a family perspective. As you rightly pointed out, the principal promoters are my father, my brother, and myself. And as my father's plans his succession, it will logically fall to the sibling that is operationally in charge of that business.
Okay, that's the other big story. But let's move on. Central Bank of India is surging after RBI removed the bank from the prompt corrective action framework. Ritu is joining us to give us more details. Ritu?
That's right, the RBI has finally removed Central Bank of India from the prompt corrective action framework after more than 5 years, and this makes Central Bank one of the last banks to be taken out of the PCA framework after Indian Overseas Bank and UCO Bank were removed from PCA just last year. Now, RBI in a statement said it reviewed the performance of the bank and found that it was no longer in breach of the PCA parameters. Remember, Central Bank of India was placed under restrictions in June of 2017 because of its high net NPAs and negative return on assets at the time. Since then, the bank's performance has seen an improvement, although its gross NPAs remain high at almost 14.9% as of the last reported numbers. Its net NPA, which is what RBI looks at, has fallen to 3.93% as of the June quarter, compared to 10.2% in March of 2017 when the bank was placed under restrictions. Its capital adequacy ratio has also improved from 10.95% at the time to now at about 13.3%. Under the prompt corrective action framework, Central Bank of India had restrictions on dividend distribution, on the management compensation, branch expansion, and so on. And now removal from PCA paves the way for normal functioning of the bank.
All right, Ritu, thanks a lot for getting us all of those details on Central Bank of India. In fact, earlier we also spoke with MV Rao, who's MD and CEO of the bank. So let's listen into what he had to say about this important development.
We will be coming out of the PCA because the measures what we have taken, and we know that it is only a matter of time, and also the confidence what regulator will be getting on our activities. That's why we have factored all these things when we have given this projection. I tell you, our gross NPA will be drastically coming down. The slippages what we are envisioning for the quarter of September will be around 1. Not more than that. We have given the graded gliding path where from 3.93 we will be touching around 3.6, 3.55. In that range we have given.
Okay, on that note, it's time. Okay, before we get to a short break, this is a CNBC-TV18 News break which got confirmed. Yes Bank is higher in trade after the board clears the sale of a 48,000 crore or weak assets to JC Flowers ARC. Ritu is back with us and she's going to tell us more on this.
That's right. As we reported earlier, Yes Bank has now said that it received no challenger bids to the 11,183 crore rupee offer made by JC Flowers ARC to acquire its 48,000 crore rupee NPA portfolio. And therefore, in its meeting on the 20th of September, the board of Yes Bank has approved the declaration of JC Flowers ARC as the winning bidder. And separately, they've also approved the acquisition of up to 19.99% stake of Yes Bank into JC Flowers ARC in single or multiple tranches. But important importantly, this acquisition of stake in the ARC is going to be subject to regulatory, specifically RBI approvals. So we'll have to see how that pans out. However, for the transfer of the NPA to the ARC, no other regulatory approvals are required. So this paves the way for cleaning up of Yes Bank's balance sheet. In another important development, Yes Bank said that the Reserve Bank of India has approved the appointment of R. Gandhi as the chairman of Yes Bank for a period of 3 years. Remember, R. Gandhi, who was a former RBI deputy governor, was also on the board of Yes Bank for 2 years during the period of reconstruction of the bank. And now with the newly appointed 9-member board, R. Gandhi is set to take over as the chairman for the next 3 years.
All right, Ritu, thanks a lot for getting us all of the details on Yes Bank, the stock around 3% higher. By the way, the market is also sort of cutting its losses right now. We're just around 50 points lower. So there has been another attempt to move up around 0.25% on the Nifty is where we're at. In fact, the Nifty Bank has also recovered significantly around 200 points from the lows. And it is a lot of these metal stocks which are moving up. So the likes of JSW, you have Tata Steel also, which is moving up. In fact, some of the financials, so Bajaj Finance has moved up quite sharply. So that is what we're seeing as far as the market action goes. So we're going to get into a short break now. But as we do that, here are some great news for investors. You can now track the US market action real time on Money Control. So log on to Money Control's website or app, and you can stay informed about all of that matters in global markets.
Welcome back. SpiceJet is the next stock on our radar. It's under pressure on the back of its recent cost-cutting measures. Sonia is here to fill us in. Sonia.
Well, thanks a lot for that. So, SpiceJet has had problems with its balance sheet for a very long time. Now, the latest is that the company has decided to keep 80 pilots on a leave without pay for the next 3 months, and this is as part of their cost-cutting measures. Remember, the fundraising program of SpiceJet has also not seen any fruition. In fact, no news of the recapitalization, despite the company coming out with a press release that they are in talks to raise money. Nothing has come through up until now. The company has been going through losses, severe losses for a very long time. In fact, in the year gone by, they clocked in a loss of 1,722 crores. It has escalated quite a bit compared to the previous years, and there's been a slew of bad news for SpiceJet. So before this, the CFO resigned in the month of August. It's been 2 months of a delay in payments of salaries to the employees in the month of August itself. And the auditor has, after Q1, raised concerns about the company's balance sheet and its ability to remain as an ongoing concern. It also talks about the overall, liabilities of the company and how they've exceeded about 5,900 odd crores. Now, the big question really is, when will the fundraising come through? Because that is the need of the hour. Until then, these cost-cutting measures is something that the company will undertake in order to stay afloat. Hence, the stock has been under quite a bit of pressure. Back to you.
All right, Sonia, thanks a lot for getting us all of the details. So the SpiceJet stock is down around 3.5%, and this year it is down around 40%. But with that, let's move on and talk about Axon Noble. That one is gaining in trade on the back of optimistic management commentaries. So earlier today, we spoke with Rajiv Rajgopal, who's managing director at Axon Noble, and he said that the company expects to return to the margins of 15 to 17% by Q4 of this year. Listen in.
I still maintain that it will take a couple of more quarters to really see the softening in coming in really accretive from a margin perspective and from a P&L perspective. As and when we start seeing the margin pressures cool off, you would start seeing an improvement in the industrial segments. That said, I think on the industrial segments, what is most encouraging is the sort of growth that we are seeing. And we are not seeing it now. We've been seeing it for quite a number of quarters. And what I love about the growth is that it's very uniform. And we don't give specific numbers in terms of volumes, etc., the way we are. But suffice to say that we are looking at strong double-digit growth. What do we give targets on? Our intent is now to start really being material in the industry and really start being in the top 3 in terms of growth. We've gained market share in the decorative paints, something that we want to consolidate and build on. Remember, when you look at decorative paints, we've got a very high share in the premium. So when you look at brand Dulux, we've got the Dulux Velvet Touch advertising going on. We've seen across all the channels, etc. So, that's a brand which has really revived very well, doing very well, having strong demand. Similarly, Dulux Weather Shield, which is our exterior brand, is doing extremely well. So, our endeavor has been to really, how do you gain across in the mass market, where we are slightly underrepresented historically. We actually spend 3 to 4.5%, not 6%. Our endeavors to come to 5 to 6% on terms of advertising.
Okay, that's Axon Noble. Let's move on and talk about Tourism Finance Corporation. That's fired up, even as two funds sell their entire holding in this company via block deals. Vivek is back with us, and he's going to tell us what's driving the stock up. Vivek?
Well, yes, absolutely right. Tourism Finance is the stock in focus, clear outperformer. Now, what actually happened was that yesterday, two funds who were classified as promoter entities completely exited, their stake in the company, and post this entire cleanup trade that we saw yesterday. Investors once again have begun to look at this particular company with a renewed focus. What they're looking at right now is the fundamentals, and given the sharp surge we've seen today with the strong volumes, we did dug up a little bit of information as far as how exactly the company is positioned in the entire NBFC basket. So this particular company, of course, is a specialized financial institution for tourism infrastructure, with majority of its focus being towards the development of hotels. The current market cap after today's move is around 640 crore. And if you're talking about the book value of the stock, around 105.5, which means that, the company trades at a 0.7 times price to book, significantly undervalued compared to other NBFC peers. So this is what at this point of time is actually driving quite a bit of stock market investor enthusiasm. The other thing, of course, to keep in mind, historically, if you look at this particular company, IFCI used to own a significant stake of almost 24%, which it completely exited in 2017. Post that, in September 2021, a very interesting fundraise happened. The company took a capital preferential issue of almost 65 crore with promoters participating, and P.S. Jayakumar, the ex-MD and CEO of Bank of Baroda, actually also had participated in this particular fundraise. So currently, if you're talking about who actually owns TSCI and what is the promoter entity, LIC has a significant stake. LIC and Oriental Insurance around 4.23%. An individual by the name of Sanjeev Thomas holds close to 5%. Very interesting to see how the stock and the company performs going forward.
Vivek, thank you very much for filling us in on that. By the way, for markets, as we pointed out, there has been a bit of a recovery. We've trimmed our losses to about a quarter of a percent nick. This compares with about a 0.5% fall that we had when we started trade. IT is seeing a bit of a recovery. The Nifty IT index is virtually at the high point. The Nifty IT index has recovered more than 0.5% from the day's low. Infosys, just take a look at the chart of Infosys. Infosys is still in the red. It's down 0.4%, but from the day's low, there has been a substantial recovery of close to about 1%. Remember, the stock early in the morning when it opened was hovering very close to its 52-week low. So some buying seems to have emerged. Numbers will be out on 13th of October, and we'll get a clearer picture. And the street is going to be watching very closely whether we do get that buyback as well.
Oh, absolutely. We'll watch out for that. And seems like you're alerting us that the earnings season is not too far away at all. So we'll watch for that. Keep your eye out on the entire cement pack. We have been telling you that pretty much all of the stocks are under pressure today. Take a look at Ambuja, Shree Cement. It's one of the top losers, Shree Cement, on the Nifty right now. Even some of the smaller names, the likes of JK Cement, you have Nuvoco. Nuvoco is down almost 8%. So that's what's going down in the cement space. And the entire Adani group of stocks also seeing sharp cuts right now. So there you have it on your screen. Adani Enterprises down almost 5%. So that's what's happening as far as the market.
Midcap IT is also having a good day. We spoke about KPIT Tech and the acquisition, but take a look at Happiest Minds. That surged close to about 3.5%. L&T Tech, persistent. All of them are seeing buying coming through at lower levels. Well, that's all the time we have for you in Midcap Radar. Thank you for watching.